Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. Lanny, I'm going to ask us a very simple question. I can't wait to hear your feedback and the community's feedback as we talk through this. Is it time to double down on SCHD? Let's freaking go, everybody.
Guys, smash that subscribe button. Give Bert the Herd and I a nice thumbs up because we're coming at you with another dividend stock video, guys. Some dividend stock talk right now because you got your dividend broskies here, guys, in this all-time high stock market. Now, granted, we are filming this on Thursday, the 18th. Stock market's down below. The S&P 500 is down below 5,600, but because of the Fed news, or I'll say the CPI data and the Fed expectations of a reduced interest rate come September, the market, a lot of the safety stocks have now gone up over the last week, which has really pissed us off. Jeff Jarrett, guitar over your head style. Bird's pissed, I'm pissed because, again, undervalued stocks only last a very short time in today's market. So, Bert, you're asking me what I think about doubling down on SCHD. Oh man, I think before I answer that question, I say we peel the hood on how much you own already, what's in the ETF, and how the stocks are doing.
All right, let's do it. So over the last year and a half in my wife's portfolio, we have been buying 4 shares every single week of SCHD. Our position has now grown significantly with those consistent weekly purchases. Our market value is over $21,000 in SCHD. And as I've mentioned before, we are not freaking stopping. We're going to keep buying. We're going to keep doing those 4 shares every single week unless this video and some comments and some other research indicates that we juice that up, we double down, and we go from 4 shares a week to 8 shares a week and just juice up our SCHD position in the second half of 2020.
So 4 shares is setting you back about $320-ish,
Yep.
give or take, every single week. Another 2 shares get you closer to that $480, $500 per week threshold, which is kind of I think almost like a nice sweet spot.
Yeah.
But before I say and ring the bell and hit my green light, yeah, double down SCHD, guys. And again, this is Schwab's Dividend ETF, one of the more prolific dividend ETFs, very cult-like, as Bert has always said on the videos. You're stacking a nice dividend growth ETF. The dividend growth history on SCHD is strong historically. Keeps historically, outside of the last few years, but historically has kept pace with a lot of the growth industries as well, indices.
Yeah, and what they do, which differs from VYM and others, is they have their annual rebalancing every single year. They have the metrics they base it on. They make sure that they're not overweight in any one individual stock. If it's over 4%, they trim the position down of the overall ETF. If they don't have a certain dividend history, dividend growth, other metrics, market cap, they will cut the position out. And sure, that has led to some controversy over the last few years for them. Like this year, they cut Broadcom, which I know is very controversial because of what Broadcom's done. They've replaced it with some other great stocks in their top 10 holdings. So last year was a bad rebalancing. This year, it looks like it's performing pretty decently, as we'll see as we go through the top 10 here a little bit later on in the video. That's what's going on with SCHD. That's why it has a cult. People love it. People in the dividend investing community love it. And there are a lot of people out there that love to hate SCHD too.
Well, I tell you what, when you look at the top 10 stocks, which quickly we'll throw it up here on the screen, but we'll list just a few, Home Depot, Amgen, UPS, BlackRock, AbbVie, Cisco, Texas Instruments, Chevron, Lockheed Martin, Coca-Cola. When you look at majority of them year to date have performed well. Granted, majority of them lag the S&P 500, but that last month, and really, that's when they've really been in this ETF, at least the last 2 to 3 months. But that last month, BlackRock up 12%, Amgen up over 8%. There's a lot of these companies that weren't performing as well in the beginning part of the year are starting to really show some appreciation.
Yeah, that's absolutely right. And that's what's crazy about this top 10. In that last month period, Lanny, the S&P 500 is only up 1.05%, especially because you've seen a lot of pullback in those tech stocks that have carried it throughout the year.
No.
Yeah, if you don't say, of that top 10, Laney, 8 of the top 10 stocks are performing better than the S&P 500 over the last month. The only two that are underperforming it are UPS and AbbVie. Everything else from that list of the top 10, they've been crushing it. However, it hasn't quite caught up to the S&P 500 year to date yet, which is one of the reasons why I think this could have some room to grow here, especially if there continues to be pullback and people flock to the safety of the dividend stocks. S&P 500 is up 16.9% year to date. Guess how many on this list, Lanny, are outperforming the S&P 500 so far in 2024?
Not 8 out of 10.
You're absolutely right. It's not 8 out of 10. It's only one. Only Texas Instruments, the semiconductor company, is outperforming the S&P 500. So 9 of the 10 are underperforming the S&P, but the last month, 8 of the 10 are performing them. If this trend continues, what we've seen in the market where people flock to safety, are people going to flock to these top 10 and the other funds in there while people are pulling back from some of the more expensive stocks, especially as you deal with potential political issues, potential overvaluation and people pulling out of them? There's a lot of stuff to go on in 2024.
Yeah, very interesting. So there's could be a lot of runway
Yeah.
too to start outperforming the
Yeah.
S&P 500 in this second half, as you've already seen with the 8 out of 10. So the last 30 days, they've been doing very well.
Mhm.
And the question is okay, are they going to start to catch up to that year-to-date return? So your
Yeah.
question is that should you double down on it? Do you want to go to 8 from your 4 shares, your $320-ish a week to $640 a week? That's the debate right here.
Mhm.
What
There's
industries do you really think are going to explode this second half?
Well, we saw it in this last week, Lanny. We saw this one in the last week. The financial stocks, the banks really flex their muscles with the potential decrease in rates coming with strong earnings performance for a lot of the top ones. You saw financials come roaring back in a way that we hadn't seen in a while. Why is that relevant here? Of the top 10 for SCHD, Lanny, there were 0 financial stocks. When you go to Seeking Alpha, when you go to other places, though, that's actually the top sector allocated to SCHD, even though it's not in the top 10. Financials make up 17.74% of the market value for SCHD. So SCHD is getting a lot of momentum from those companies that are in the other 60% of their portfolio that aren't in the top 10, which could keep pushing it higher and higher, especially if this is just the beginning of the banking run. Not a
Yeah.
bank run, the banking run.
Yeah, and then you also have, the healthcare industry and as a close second at just at 15.5% industry allocation in SCHD as well. I know with Johnson and Johnson, I know that was an example. I believe they had a decent earnings, right? This week they've
Yeah, they're
announced.
they're at 155 at the time we're recording this video. Again, you've seen Pfizer's back up to 29 in the 29s. You've seen other ones start to get some momentum back. Even though AbbVie's been down over the last month, you're seeing other healthcare, other pharmaceuticals pushing their way upward, bringing up the bottom for SCHD and others.
Come on, Pfizer, killing me
Close,
here.
close. So overall, that's why. So those are some of the sectors here. There are other ones: consumer defensive, industrials, energy, consumer cyclical. Make it up. If sentiment becomes more positive, rates come down, and people get even more spend happy, and the market goes on a run, you're primed to see some of those SCHD holdings take off as well.
All right. So, Bert, I know it's been harder if to find undervalued stocks in the market. I'm all about automating and just
Mhm.
investing as often as much as possible, with my Vanguard trifecta. I'm going to give you the thumbs up to say, yeah, buy some more SCHD, if you want to keep boosting that up. Or I know you do VIG as well. So, not sure if you consider that, but yeah, I don't see why you couldn't just add another two, share
Yeah.
each to you and your wife's portfolio a week.
Yeah, and that's where I'm leaning. At least getting 6, start ramping that up here in the next coming weeks. Maybe even double down because it is true. I'm getting very frustrated not finding undervalued stocks to buy. It seems like really we joked about that before we reported. It's only Starbucks right now. It's only Nike. We've been buying those. There aren't that many other great stocks that are undervalued. So while we're waiting, keep investing, keep putting more into it. It might be time to double down. It might be time to get those 8 shares. And guess what? If more stocks become undervalued again, Lanny, I don't have to keep doing 8 shares. Come back down to 6, come back down to 4. None of this is permanent, but right now it might make sense to double that position here in SCHD.
I dig it, guys. What do you guys think in Bert's situation? Would you double down on your investing in SCHD? Are you buying SCHD or another ETF every day, every week, every month? Let us know in the comments below.
If you haven't already, subscribe to this channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Over and out.